Let's chat about this and many other things. As Ramesh, MD and CEO at Kotak Investment Banking, joins us in the show right now. Ramesh, morning. What kind of changes are you expecting to see the market architecture requires? Because we understand SEBI is meeting today and they're going to be considering some proposals. What are you expecting?
See, frankly, I have no comments to give or offer on what may get discussed at the SEBI board. But I'll just go back to a point that was made on this show a couple of minutes back. In May of this year, if you saw, SEBI had put out a report on the back of a committee that was constituted to look at simplifying some of the ICDR norms, which were taken to the Primary Market Advisory Committee and then put out for public comments. As a preamble, I would say that the ICDR guidelines for public offerings and other forms of primary market offerings came out originally in 2009. And the idea was to look at how do we simplify complexities, how do you look at some of the regulatory changes around the Companies Act, the fact that now we don't have INGAAP but Ind AS, amendments around the buyback offerings of 2011 and stuff like that which needed to be changed. And more importantly, SEBI as a regulator which has been very proactive in bringing reforms around the primary issuances to make them align with global practices. It was with some of these objectives that the group was constituted. The findings were put out, and the ICDR being the Bible around which the primary market operates, all of these after public comments are out for us to wait and see how SEBI comes back after due deliberations within itself. So let us wait whenever they come after taking up the findings of the public comments and the primary market issuances around this topic. I would only say one thing, that if you look at calendar 2017, all in aggregate 205,000 crore got raised from all forms of primary issuances, the IPOs, the QIPs, the OFSs, the government disinvestment and all of that. And I think it's in the back of this robust architecture that made it possible. There's always scope for bringing them and aligning them to global practices. So this is a great step in the right direction. And let's just wait whenever the outcome comes on how all of these improvements also lead to a greater market architecture for companies to do issuances in India.
Mr. Ramesh, hi there. Good morning. Now, how do you see issuances this year versus last year, both in terms of IPO as well as rights and other M&A space? What sort of changes or proposals would you like to see on this front?
See, instead of discussing proposals, I would say that if you take the last 2 years and 2017 in calendar in particular, I think it was a bellwether year for primary issuances. As I mentioned, 205,000 crore issuances got done. A number of large issuances got done around the FIG sector. The insurance sector became a sunrise sector. A number of issuances listing both from government and private companies came to the market. And the good thing is that for IPOs and the QIPs which came to the market last year, investors made money, and that was a record year. The markets were supportive. If I just contrast it with what we see today, I think the supply side issuances are ready. Only thing this year we expect that issuances can be more broad-based. They'll not just be from the fixed segment, but they can be from the core sector, they can be from the power sector. So we are sort of hearing our clients getting ready to look at fundraising in some form this year. But what we must contrast that is the fact that the markets in general are a little softer if you take the first 5 months of this calendar year. Most important, it's characterized by volatility. And when you have volatile markets, we've all got to be careful about how we do these issuances. I think, but having said that, the Indian markets are mature. I think they will be in a position to deal with this volatility. But there are more challenging market conditions we have today than we had last year. Another point I would say is that the FII inflows this year, we've had more outflows than inflows. The mutual fund collections continue to be good. They're a little lower than last year, but they continue to be quite good. So I think there will be some amount of liquidity available, and we have to see how the issuances market play out.
like you rightly summed up, given the kind of market scenario or the landscape right now that we're in, it doesn't really instill too much confidence. As we speak, there are two primary market issuances which are currently on, one from the government stable as well, and let's see how the response has been. And even if you were to track the past 1 year history, besides an Avenue Supermart, these IPOs haven't really been much of a success. They've been overvalued IPOs with muted retail response, and we all know what happens on listing day. So do you get that kind of confidence that investors as well as promoters have in this kind of market, in any case when the market is just so volatile and skewed for large caps versus what the mid caps have been faring?
No, so if I just look at 2017 in the context of primary markets, I wouldn't agree that the responses were muted. In fact, we got a number of issuances that did very well. You had responses on most of these IPOs from all segments of investors. So that was the trend of last year, and I mentioned earlier that in many of the listings, investors also made money. Having said that, if you look at the characteristic of some of these companies, these are consumer companies, these were from the fixed space. So the valuations in general tended to be rich in terms of either the price to book or price to earnings multiple. But when we look at the mix of companies that may come to the market this year, there could be offerings also from the core sector where the valuations are likely to be a little lower than what we saw from the consumer stable. So I think we are going to see different types of issuances coming to the market in this calendar as compared to what we saw over the last 2 years.
You know, we've been talking about what we're expecting from this meet as well, Mr. Ramesh, taking stock of valuations being on the higher side, and this is something that the markets have been, you know, working with for quite some time now, the overall valuation conundrum, if you will. What exactly are you expecting on this point?
See, I have no idea about the meet. I am only talking to you in general about markets. What's happening around the primary markets, what kind of fundraising we saw last year, what's in the pipeline this year. And I continue to say that the supply side, we are seeing issuers getting ready. It's still early part of the year. We are still in June. We have to see in the fiscal, how the issuance markets play out. But it is likely to be characterized by volatility.
On that note, appreciate you taking the time out. You've given us a sort of sense of, from the market perspective, what exactly is going to be keenly watched out for when it comes to valuations, issuances, etc. Because this is an all-important meet. Lots on the agenda from the SEBI today.